Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the low time frame with this WXY sideways double combo corrective structure where W is a flat, X is a complex structure, and then wave Y can either be a zigzag, a flat, or a triangle. In this case, I am then looking for a zigzag structure or a flat structure, because for a triangle it is way too early to call, as we then only have wave A. You still need a B, C, D and E before then eventually the end is in and you're looking for a move to the upside. Most common target area for wave Y is between the 0.618 and the 1.236, taken from the high to the low of W to the high of wave X, which as you can see has been hit over here. So one of the scenarios will of course then be continuation, but at the moment it's not the highest probability scenario yet, but I'll cover that when jumping into the lower time frames. The most common target area of this common area is the 1 to the 1.236 between 40.2k and 39k, and just below that area we also have this yellow target box 38.6k to 39k. If we then zoom into the potential structures of this wave Y, then I prefer to look for either a zigzag or a flat structure. So if we then start with the zigzag, then we have to look for an expanding diagonal here in wave A, which was first mentioned by John in Discord. Here we are then looking for a wave 1 zigzag, 2, 3 zigzag, 4, and then eventually a wave 5 zigzags. All of the waves are then zigzags here, ending a wave A, looking for a corrective B to the upside, where the common target for wave B is between the 382 and the 886 Fibonacci, taken from the high to the low of wave A, after which we then expect a wave C to the downside, preferably impulsively and fast on higher volume, where then again those lower targets are going to be very interesting indeed, like the yellow target box just mentioned, but also the blue box here, but preferably price then dips below this blue box and also takes the lows of this range here at about 40.3k. We do have resistance just above price, as you can see, which is the blue box on my chart here, sitting between 43.4k and 43.7k, which also fills the gap that we have over here. Currently price here is in the middle of this gap. Probabilities are there to fill the gap and also touch the golden pocket, which arguably could be part of this target box if I drag it to the downside a little bit, giving you an area between 43.3k and 43.7k. The other scenario would be a flat structure in wave Y. So then we're looking for a flat in W, X, and then another flat in wave Y, which is allowed. The only pattern that is not allowed in a sideways double combo WXY is a zigzag in W, then you have an X and a zigzag in Y. This is not allowed in a sideways double combo, but in this scenario we're looking then for a flat structure here, which is allowed, flat, X, flat, and here we are observing this move to the downside as then a three-wave structure in an A, B, C. After wave A is then in, we are looking for a three-wave move towards the upside for this wave B. Most common target area for this wave B is between the 1.38 and the 1.236 Fibonacci, taken from the high to the low of wave A, which is between 45k and 45.5k, which is in confluence with the yellow resistance box that we have here, sitting between 45.2 and 46k. For a wave C and then a potential zigzag in this wave B, which is most common by the way in a wave B, a zigzag family structure, either simple 535 or a double WXY sharp zigzag to the upside. The 1.618 is also still a target, which is sitting just above the target box, as you can see. After the highs are then taken, we are looking for an explosive impulsive wave C to the downside, and in a flat structure, preferably your wave C is quick and high volume to the downside, 1, 2, 3, 4, 5, also looking to see these lows taken in this particular scenario. Again, the resistance area just above price could be a very interesting high, in this case for your wave A or your W, for then a rejection in a wave B or a potential X, and then you want to see continuation to the upside. So in both of the scenarios I just covered, we are looking for a bit of a retracement to the downside soon. In this flat structure we look for resistance move down before then continuation to the upside, and in this scenario here you would be looking for continuation to the downside. We'll see what happens if price is reaching this box over here. If price can pass this area over here and then act as support, then we can be looking for price to move to the upside directly. In the more bullish scenario, that is then also what you're going to be looking for. In this scenario, we then have a finished WXY structure, the 0.618 acting as a target for wave Y and is hit with then a potential zigzag in Y, flat X zigzag, continuation to the upside. It would be supported by potentially then the bullish CVDs we have over here and also bullish CVD divergences locally where the target is this high and these highs. So in this scenario, you want to see an impulse from the low to the upside where eventually you're looking for the highs to be taken and price to continue to higher prices. The more bearish scenario would be a zigzag to the downside, A, B, C. Now in the previous video I went in detail into this structure over here, so I won't repeat myself in this particular video, but basically this scenario at the moment has lower probabilities compared to the WXY, where in this scenario we are then looking for a wave C to the downside, which should be a 5-wave structure and an impulse, 1, 2, 3, 4, 5, where then if we are looking at this first structure to the downside, we're looking for a wave 1, then we want to see a wave 2, before then a wave 3 to the downside. Common target for wave C is between the 1 and the 1.236, between 40k and 38.9k, with the 1.618 also still a target at 37.2k. If we zoom in to this structure and we're going to be looking for an impulse to the downside, then it's basically the same scenario as with the zigzag in an ABC, but in this case we are then looking for a wave 1, 2 and then a 3 to the downside. So instead of ABC move back up, you're going to be looking for deeper and lower prices to come, but the movement of price is the same, and that is important in this scenario where for a wave 2 your common target area is between the 0.5 and the 786 here. The moment the 886 is hit, probabilities decrease for this scenario because you don't want the 886 hit, as that is a low, or I should say less common target for a wave 2, and as you can see the 0.5 has already been hit, but nonetheless that target area here is very interesting. More locally, if we zoom into this structure here to the upside from the lows, then of course if we are looking for bullish continuation, we want to count an impulse to the upside, right? So from the low here we have a potential 5-wave structure. I should even go to the 5-minute time frame. That's not something I do very often, but here we are then looking for 1, 3 wave 2, 3, 4, no overlap between 1 and 4, then a wave 5 to the upside in a potential wave A or wave 1. Then we have a retracement to the downside here in a wave 2 or B, and the next move to the upside. Now what is important here once again is that the common target area for a wave 2 taken from the low to the high is between the 0.5 and the 786, but over here the 0.5 has been missed just by a few dollars over here, which does increase the probabilities a little bit for that low to be a wave B compared to a wave 2, but then again it's so close, it really depends on the move that we have towards the upside. You see the target area for a wave C on my chart, which is the 1 again to the 1.618, which basically includes this resistance box, and that is also why I keep talking about this box, because it is very important for the scenarios. If this is a potential ABC, then you want to see a rejection and price moving to the downside, right? If we are looking for an impulse, then we're looking for a 1, 2 and this to be a wave 3, where a minimum target for your wave 3 is usually the 1.618, which you can see over here, and then you would expect another 4 and a 5. The 1.618 is then usually, as mentioned, a minimum target, so you would like to see a wave 3 extend as well. Then price is going to move above the box and we could potentially look for the highs of the range to be taken. Something else important here is what you see on the chart, the 0.618 and the 0.5 Fibonacci. And these fibs are taken from the low here to the high. And the reason I put these on my chart is because of the wave structures we want to see in an impulse. Currently, you can see that the volume of this move to the upside is sitting in the end over here. So this is all pretty low volume. Then we have the push to the upside, and the last couple of candles of this push have the highest amount of volume. Now that means that for an impulse, meaning a wave 3, 4 and 5, we want to see at least another 4 and then another 5 to the upside, higher high on price, but a lower high on volume, ending a move to the upside, in this case, on high volume and then retracing too deep for a wave 4, meaning hitting the 0.618, increases the probabilities for this move to be an ABC and lower prices to come. So for an impulse, you do not want to see the 0.618 hit here at 42.8k before taking this high. If price takes the high and then moves down, well, we'll see what happens then, right? But at least you then increase still the probabilities for a potential impulse to the upside. So that is why these fibs here are important. The 0.5 is a maximum target for a wave 4. And you do then expect, of course, a wave 5 to the upside. Again, if you hit the 0.618, probabilities go down for an impulse to the upside. And the resistance here is very, very important for all of the mentioned scenarios. If we look at the CVD divergences, then the CVD divergences mentioned this morning have played out. This high was taken. Very nice indeed. Price moving to the upside. That's what we like to see. At the moment, locally, there is no divergences going on. CVD is moving down as price is moving down as well. So yeah, neutral CVD on the chart, and we got to be more patient to see what happens locally. So if we then look at the probabilities of the different scenarios, then currently on the low time frame, which is basically this time frame here, the range that we've been covering in this video, the probabilities would still be higher to look for some lower prices, right? And then the WXY or a potential zigzag in an ABC, but the WXY here would have my higher probabilities in this case, where we're then looking for this ABC zigzag to the downside or this flat structure, where I think this flat structure is especially very, very interesting because it creates a fake high and also a fake out. People might think we finally past the resistance over here, buy, which creates the liquidity to then move price to the downside impulsively in a wave C. So, but this is personal preference, right? In both of the cases, we are basically looking for price to reject somewhere around this box, just above, just below, just around this area. Here we expect a retracement and a move up. And in the zigzag, then we like to see continuation to the downside, right? Also in this scenario here, the impulse to the downside, we look for a rejection in this area and a move to the downside. So you can see there is overlap between the scenarios, which is what we like to see. The only one that does not have overlap is bullish continuation, which here is on number 3, which currently for me has the lower probability scenarios where we really go up for new highs. But if price can pass this resistance, there is not too much left above price here. A couple of highs, yes, but not too much other resistance. So we could be looking for the highs to be taken, the yellow box, but then also still keep in mind a potential flat just in case. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.